Welcome back, folks. This is Josh Selway, an editor at Schaefer's Investment Research, bringing you another edition of the Schaefer Stock Market Podcast. We missed you last week. I was on vacation. I'm sorry about that, but I'm going to make up for it this week. I swear, I got some good stuff. We're going to go over some notable options trading from the past week, some names that speculators are targeting, and some of the biggest trades that we covered over at schaefersresearch.com. I am recording this podcast on Thursday, March 7th, 2019. Let's get started though real quick with some broader things happening in the market. Stocks are actually selling off today. The Dow is down more than 200 points. Traders continue to wait for more information on a U.S.-China trade deal. Everyone is just sitting back for the most part, waiting for more information on this. President Trump is reportedly pushing for a deal. That's what the news reports say, that he's pushing for a deal. He wants to see the market go higher, but there's really been nothing substantial, and it's hard to say when exactly something's going to come out. So we could be hanging on this for a while. It's hard to say. There's really no way to tell. But aside from the speculation around trade and a potential trade deal between the U.S. and China, today we have this European Central Bank news where they left interest rates unchanged and they lowered their growth forecast for economic growth. And this just goes along with the trend that we've talked about in recent weeks on the podcast, and that is that one of the biggest headwinds right now for the market, and has been in recent months, is this fear of a global economic slowdown. Again, I go back to the latter years of 2017 especially, this growth in multiple global economies, emerging markets, all this it was a confluence of these things. All these things came together to really help global stock markets rise together, and especially resulted in big gains for the U.S. stock market. And now there's been a number of signs that this global economic growth is slowing, and this is just the latest sign of this. Again, the ECB left rates unchanged, and they even launched a new loan program, a stimulus program, to help banks and to potentially offset some of this slowdown that it's seen in the Eurozone economy. And one piece of economic news just to point out, because it received some headlines, and we're going to cut the Trump administration some slack on this because they're still working on this. I'm referring to the rise in the U.S. trade deficit. It actually jumped to a 10-year high of $621 billion in 2018. Of course, that's somewhat ironic. That was what President Trump always cited as an unfair advantage for China and other nations, that we get ripped off on trade and have these huge deficits. A lot of economists say the deficits don't really mean anything. In fact, that could be a good sign for our economy. It's actually a fairly complicated issue. I'm not going to pretend to really understand it either way. There's a lot that goes into it. Part of the reason it did go up is all the things that the Trump administration has done to address the deficit over the long term. So in the short term, the deficit has risen, has touched a 10-year high, but the idea is that eventually this is going to start coming down, especially with these new trade deals. So that's just something to watch for. But let's move right on to some notable options trading from this past week. We covered a lot of interesting trades over at schaefersresearch.com, and I first want to start with our coverage of General Electric, GE. General Electric had a rough week because CEO Larry Culp warned that the company's 2019 industrial free cash flow is going to be negative for the year, and that really surprised a lot of investors, and the stock sold off. At the time of our writing, it moved all the way down to around the $9 area after trading above $11 just a few weeks ago. This $11 area we noted for GE in late 2018 acted as an area of support. So this could be some technical resistance for the stock moving forward. So watch out for that. There was a huge reaction to this. JP Morgan securities analyst Stefan Tusa said that his $6 price target on GE stock now looks generous. And Mad Money host Jim Cramer compared the comments to dropping a bomb on his head, and GE stock really suffered because of this, and options trading picked up in a big way. And that was especially true on the put side of things. The option that we highlighted, one of the most popular contracts, it was the weekly March 8th $8.50 strike put which will expire at tomorrow's close. And there was buy to open activity here, which means that traders are expecting GE stock to fall below $8.50 by the end of the week. Today, however, the stock is trading slightly higher, holding around $9.30. So far, those bets are not looking great. And GE is actually seemingly getting some support from its rising 50-day moving average. Another big name that saw notable options activity was drug maker Bristol Myers Squibb, ticker BMY. This comes after a historically volatile stretch for the stock. We cited its 60-day historical volatility, which was near an annual high, and options data suggests that traders expect more volatility for the stock going forward. We noted a potential long straddle at the March 5750 call and put. So traders initiated positions here, and the goal would be for Bristol Myers to make a big move in either direction. So based on what these traders paid, on the upside, they're looking for the stock to go up to around the $63 mark. And on the downside, they're looking for it to go around $51.80 per share. You can read about that trade over at schaefersresearch.com. And if you want to learn more about the long straddle or any other options trading strategies, we have an extensive education section over on the site. So check that out again. Traders betting on more volatility for Bristol Myers Squibb. And again, we cited the 60-day historical volatility, but I can tell you this stock has been extremely volatile for about 2 years now. We'll see if that volatile stretch continues for Bristol Myers Squibb. Revlon Cosmetics company, Revlon, ticker REV. That stock sold off earlier this week after brokerage firm Jefferies pointed out that data from Nielsen showed disappointing sales for the cosmetics company. Specifically, the sales trend was dramatically lower than people expected. At the time of our writing, the stock was down almost 18%, near the $20, $21 mark, and there was a lot of big options trading on that stock. And it was actually on the call side of things. People were targeting the April 2250 call, so potentially betting on a rebound here for Revlon stock, but quite the dramatic fall for the shares. They fell all the way below their 200-day moving average. They were trading above $30 in late 2018, but far off those highs now, though some traders seem to be betting on a rebound for Revlon stock. Another interesting name I want to talk about is satellite services provider Intelsat. That is ticker I. Last year around this time, this stock was trading around just $4 or so, and then it just skyrocketed. By October, it was all the way up to nearly $38 per share. Since then, it's pulled back fairly dramatically. It was last seen trading just around $18 per share. But RBC this week came in and said that this pullback in the stock is a great buying opportunity. Now, they said a great buying opportunity, but they only upgraded the shares to market perform, which is essentially a hold rating. So you think if it was such a great buy opportunity, they would say it's a buy. But regardless, options trading picked up as a result of this bull note. You had long-term call options were extremely popular, specifically in the January 2020 series, where it looked like traders were initiating call spreads, but more short-term traders were targeting the April series, specifically the 18-strike calls, potentially betting on more upside for Intelsat, which again, it surged like over 1,400% from low to high in 2018. So some traders may be expecting another rise from that stock going forward. Three other names that saw some notable options trading this week. First of all, Sprint, which the drama continues for the Sprint T-Mobile merger. There's been a lot of speculation about what regulators are going to do with this. You had this story come out that T-Mobile executives had been racking up pretty substantial bills at President Trump's hotels. A huge uptick once this merger was announced. So that doesn't look good, except the company did admit that. So that was pretty interesting. Then you had reports of quote-unquote unimpressed members of the Department of Justice who seemingly aren't in favor of this deal so far if you go by these news reports. And just yesterday, we got news of a March 12th hearing scheduled for the House of Representatives, where they're going to go over this deal and hear why the companies think this is such a great idea. So while this was happening, options traders were targeting the weekly March 29th 6 put for Sprint. Now, Sprint was trading just above the $6 mark at the time of our writing, so these traders are expecting the stock to pull back in the weeks ahead, and there was pretty significant volume at this strike, so that would suggest some pretty confident betting from Sprint options traders, maybe looking to speculate on the news around this deal, some potentially bad news if the stock's going to pull back. So that'll be something to watch out for. And remember, as you follow the news with this merger, that some options traders are betting on a pullback by the end of March. We also highlighted some substantial options trading on China-based Jinko Solar, ticker JKS. Earlier this week, that company was hit with patent infringement litigation from US-based Hanwha Q-Cells, another solar cell producer that, again, patent infringement claims. Jinko Solar denied those, saying that there was no legal basis for this. Regardless, this stock was trading just around $17. It had sold off pretty substantially in the days ahead of our write-up too, so it's been a pretty rough stretch for Jinko Solar, and options traders are betting on even more losses going forward. There was a lot of action at the April 12th put. So again, Jinko Solar trading around $17. Traders are potentially speculating on a move all the way down to $12, and it's also notable that short interest is very high on Jinko Solar, so a lot of pessimism around this stock. A lot of people expecting it to pull back. In fact, short interest is almost 30% of this stock's float. A few quick hitters here before we get out of here. I wanted to note this continued pullback in CVS Health. The stock just continues to get slammed. If you just look at a stock chart for CVS for the beginning of 2019, it is very ugly, and analysts continue to cut their outlooks for the stock this week. It was Citigroup that just dropped its price target down to $68, which is still a pretty sizable premium to where CVS is trading, around $54 per share. But the real issue, which we called out, and as contrarians, this is what we look for. We look for underperforming stocks with a lot of optimism around them, especially from analysts who theoretically have yet to properly adjust their ratings. And for CVS, most analysts are still quite bullish on this stock. So if this underperformance continues from CVS, we would expect more headwinds going forward in the form of downgrades or price target reductions. And also, Target just delivered earnings, and the company announced its best traffic and comparable sales growth in over a decade. So Target is seemingly doing well with the transition to digital sales. We saw this with Walmart too. Walmart had made a number of investments in e-commerce. Target as well, and it seems these companies are handling those transitions very well and picking up where other retailers have struggled mightily. Many are closing stores. Target, though, for right now, seems to be doing well. It was last seen trading around $75 per share. And the last name I wanted to mention is this company called Zebra Technologies. The stock ticker is ZBRA. The stock has been outstanding in recent years. Pull up that stock chart if you want. Again, ZBRA. And this fell on our radar this week because Berenberg brokerage firm initiated coverage with a buy rating and $250 price target, which is a more than 20% premium to where the stock is now. And the thesis behind this, Zebra Technologies has a number of different technologies and solutions to help companies track things in logistics and shipping, and to make all parts of their business more efficient. The big tailwind here for this company is growth in e-commerce, especially Berenberg noted Amazon, and that they said that the stock is relatively cheap and could actually be a strategic target for a bigger company, so a potential buyout target there too. And what is also interesting to me, especially being mentioned in the same breath with Amazon, is that Zebra Technologies recently acquired this company called TempTime, which is a private company that is focused on temperature monitoring solutions for the healthcare industry. Now, Amazon is hoping to get more and more into healthcare moving forward. But one of the big issues with this, especially if you're shipping medications or other types of healthcare products, is that they need very specific temperatures, and they can be very sensitive to different temperatures, and that makes it more difficult, obviously, in the shipping process, handling, and all these things. So Temptime is an interesting company to have exposure to, and if Zebra can benefit from the growth in Amazon too, I find that pretty interesting. So definitely a name to watch going forward. Zebra Technologies, ticker ZBRA. I'm going to leave it right there with this episode of the Schaefer Stock Market Podcast. Make sure to head over to the website, schaefersresearch.com, to see everything we're writing about, or just see us on Twitter, StockTwits, or Facebook. If you haven't already, subscribe to the podcast wherever you listen. Leave a nice review if you want, or a mean one to let me know what I'm doing wrong and how bad of a job I'm doing. That's fine too. We're always trying to improve. But until next week, this was Josh Selway with Schaefer's Investment Research. See you next time.